Hi, this is Graham Bibby on the 1st of October 2014, and I thought I'd do a special Australian alert just to show Australians why I don't just prescribe to the buy and hold philosophy, because particularly with the Aussie market, it's been on a roller coaster this year and last year. So what I've got here is the iShares Australian ETF. ETF means exchange traded fund, which means it's a trust, it's a mutual fund which is listed on the stock exchange. So you can buy it and sell it anytime the market's open, but it actually replicates the Australian index. And you can see here, even though it's an index, this is how volatile it's been since October 2012. The fund went up from below 24 to over 28, which is a 4-point movement, which is something like 20-odd%, and then went from 28 all the way down here to 22, so a 30% decline, and then it went from 22 to 27, which is somewhere in the region of a 25% increase, and then it fell from over 27 to under 23, losing all of that, and then it went recently all the way back to 27, and it's on its way back to 23 again. So you can see there that if you've got a buy and hold philosophy, at best you'd have been riding the roller coaster, because right now, where this arrow is, you're right back where you were in October 2012. You know, in the Insiders Club, it's been more of a difficult year because markets have been reversing trend, but it has been nowhere near as volatile, for example, as the Australian market. The problem is you normally only invest when you see an uptrend, so you're investing normally in this period, and then when you see a 25% decline like that, you're exiting around here, and if you were to reinvest, it would be here, you're disinvesting around there. So this is a good case scenario, but if you were buying as normal people buy and selling as normal people buy, the results could be quite horrendous. This just takes us back a bit further here, because again, I want to show why I don't believe in subscribe to buy and hold philosophy. Because here's the market now in 2014, and this is where it was in 2010. It was actually higher than it is now, but we've gone here from something like 18 to over 28, back to 19 to 28, back all the way to 22, up to 27, back to 22-ish, up to 27, and we're headed to 22 again. So, you know, when they tell you to buy and hold, you know, we've been, since 2009, we've been on that roller coaster. And we had a roller coaster period here from 93, well, so at the end of 93, we could say this point here, where the arrow is, into 2003, which is 10 years, the Aussie market went nowhere. So you have to be able to follow those trends and look for superior stocks. Don't forget, you know, in that period, other markets were performing. That's why you need overseas exposure. US I like because we can buy those undervalued stocks. But then we do get a trend set in. 2003, the market goes from $8 to over $30 in roughly 6 years. So $8 to $30, 400%. If you didn't cut out here, then you gave back a lot of that here. In fact, at this point in 2009, you were roughly at the same level you were in 1996. So I just wanted to get that out there, that I don't subscribe to buy and hold. You need to operate stop loss systems. You need to avoid this sort of decline as much as possible. You can't avoid the decline altogether because the trend needs to reverse. Stop loss levels were somewhere in, it could have been 27, or if you take this, where this arrow is the last bottom, it was just below 27, let's say 26.90, but we're 23.94 at the moment. So it's Graham Bibby here, just saying the overall Australian market is looking negative. I wanted to get that out there because a lot of people who've got self-managed supers not joined us yet, maybe thinking of doing so, and those who are with us, I just wanted to show what's been going on in the markets. So this is Graham Bibby on the 1st of October 2014 saying have a great day. I'm watching the markets as always with as much vigilance as possible. It's all about restricting the downside for me, and at some stage markets will trend, and then we'll have significant upside because all our stocks are undervalued with superior earnings growth. Have an amazing day. This is Graham Bibby, over and out.